Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 5:30 in New York. It is Thursday, 18th day of July 2019, and this is the daily report for gold and silver. And what a day we have seen. Tremendous upside surges in both gold, silver, and platinum, with palladium trading lower on the day. And that was on multiple events occurring today or being reported today, starting with a statement that was extremely dovish by the president of the New York Federal Reserve Bank. Also, reports that the U.S. Navy shot down an Iranian drone. And then lastly, a tweet that came out from the founder of Gold Money, and we'll speak about that as we pull up our technical studies. But let's take a look at the board. Traders, after yesterday's dynamic move in gold and silver, it was my opinion that it was not if, but when and how we were going to position ourselves for a long trade in gold. As the market closed and opened in Australia, I noticed some upticks, and I felt that if we get a follow-through today, which was yesterday, we certainly needed to position ourselves before. We sent out a trade alert. Traders taking that call got in at about 14.28 to 14.29. The market did trade to a low of 14.15, but as you can see on the board, it closed up $24 at $1,447.40. We took most of that money in as potential profits on the trade. Now that was about 1.7%, but that was dwarfed by silver gaining 41 cents, trading at 1638.50. We will look at some silver charts today, but that market is moving quite nicely to the upside. Platinum gained a little bit over 1% on the day, $9.70, 856.80. And lastly, it was palladium that traded lower, losing $17 at 1526.10. Now, the dollar, which was nominally lower at the beginning of the day, really started trading lower towards the end, losing over 0.5% at 96.34, and that certainly provided some pretty brisk tailwinds from this exceptional move in the precious metals complex. Traders, let's take a look at our current studies. Traders, on a technical basis, it does not get any sweeter than this. Although it was fundamentals that moved the market, and a multitude of events did that, on a technical basis, we have a clear and defined and utter breakout above the compression triangle that we have identified over the last couple of weeks. Yesterday, we saw a beautiful move to the upside. We were not in that move, but we saw it open really near the lows of the compression triangle, meaning our support line here, and close right at the upper end or the resistance line, that resistance line being drawn from a series of lower highs. Now, although the market did dip into this compression triangle, you can see that what is defined as the open to the close is clearly a breakout above this. And most importantly, it is a new record close in terms of this year, and I believe a 6-year high. We are certainly sitting well above 1442. That was the former high, not close. Yesterday was the highest closing price, but we closed beautifully at 1447.40. We have a trade in place. I'm going to mark that at 28.50, in between 28 and 29 where it was trading. And we've got almost $20 on that trade. Now, I purposely put our stop quite low at 1401.13. And the rationale behind it, when I placed that stop, was that if we got any kind of wild gyrations, I wanted to be under yesterday's low. And 1400 is an area that I have talked about as having major support. We've not even come close to testing 1400 over the last week. And that's the reason I felt safe at 1401.13. We will, of course, look to move that stop up, and we'll do that rather quickly. Whether that is on Friday or next week, we'll watch the market very close, but I feel really comfortable about this trade. Upside target right now remains what we've talked about over the last couple of trading days, and that is if we had a solid break on a closing basis, which we did, above 1442, which was the high achieved this year, we would make a a straight stab at about 1480. That is the 0.618 extension. We've talked about this number on quite a few occasions, but traders, we are getting closer and closer to that elusive brass ring. Traders, my recommendation is we maintain our current long position. We'll maintain our stop and look to move that up relatively soon. Let's take a look at silver. So traders, as you know, we have been looking at silver very closely over the last 3 days. I've given you different areas because I am aware of the fact that we have a lot of silver traders, and although we haven't put on an active silver trade, I want those traders to have an idea of the different areas that could be resistance areas or our current targets for this upside move. We're looking at a daily chart. I will compress it and turn it into a weekly to give you an idea of where these fib retracement numbers come from. But we've talked about over the last couple of days the importance of 1622 to 1625. That is the 0.618% retracement level. That's right here. And traders, for some reason, our daily chart wasn't reflecting the real close of the market. It was showing us a close at around 619. I've moved us to a 240-minute chart, and as you can see, it closed definitively on the highs at 1638.5 cents. That is well above 1622. And in order to look at our next level, we will want to move to a weekly chart. So traders, we are looking at a weekly chart, and with one caveat, and that is that this weekly chart, as I said, is showing the current close at 619, although my intraday charts are showing that silver closed on the highs at 1638.5 cents. That's a net change of 41 cents on the day. So we're looking at the close actually being up here. This being the 0.618% retracement level. We talked about the fact yesterday that it has some real good history. Here it's a support area, here it's a resistance area, and the fact that we closed and went right through it like a proverbial hot knife through butter tells me that the next real level we want to look at are these two series of tops, and they come in roughly at 1740 with 1770 to 1768 as our maximum upside target for this run, because that matches up with this high and also where we're putting in our basic fib retracement, which starts from this high and then goes down to the low at 1385. Traders, I think that if we see follow through in silver, which I do expect, look for these areas to be taken out rather quickly. We might have a little bit of resistance at 1675, and that would simply be based on a technical basis at these series of tops that came in last year. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.